So, welcome back to the session of financial management, and we are discussing unit number two, specifically the third point of unit two. Here, third point of unit two means capital structure. Okay. First, we have discussed the sources of finance, equity, preference, and debt, and internal sources, theoretical part. Second, we have completed the practical aspect, that is cost of capital. Okay, cost of equity capital, cost of preference capital, cost of debt capital, and then after we have started the third point, theoretical point, capital structure. Okay, capital structure is a mixture of equity, preference, debt, and internal sources. And then after we have discussed the factor affecting the capital structure, 17.17 factors are there. And then after we have started the theories of capital structure, it means a different views of experts about the capital structure and market value of the firm. Up to this, we have discussed or we have completed two different theories of capital structure. Number one, net income approach, given by David Durant, and this is the relevant theory. Okay, please remember everyone here, when it comes to our theories of capital structure, okay, these theories are divided in different categories. The first category means relevant theories. Okay, relevant theories means there is a relation between capital structure and value of the firm. And second comes irrelevance theories. According to irrelevance theories, there is no relation between capital structure and market value of the firm. Under the relevance theory, we have number one, net income approach. So, net income approach is a part of relevance theory. There is a relation between capital structure and value of the firm. And if you look at here, okay, the core of this theory is as company use more debt capital, overall cost of capital will reduce, and as the overall cost of capital will reduce, market value of the company will increase. अपना मोबाइल जो भी है वो साइड में छोड़ दो सब और यहाँ पे ध्यान दो. Okay, here more use of debt means more debentures, more bonds, more bank loans, long term loans, debentures, and bonds. As company use more debt capital, overall cost of capital will reduce like this. Okay, and the firm value here, the value of the firm, that is increase as cost of debt will, the use of debt will increase, and overall cost of capital will decrease. Are we clear? How many assumptions are there? Total 5 assumptions are there that you need to remember. And formula is V is equal to A plus D. Then after we have completed a second theory, that is NOI, net operating income. It is again irrelevant theories. Okay, given by David Durant. And according to this theory, there is no relation between capital structure and market value of the firm. And the core of this theory is as company use more debt capital, it will increase the risk perceptions of shareholders. So the cost of equity will increase as the use of more debt. जैसे जैसे कंपनी डेट कैपिटल का प्रोपोर्शन बढ़ाएगी वैसे वैसे कॉस्ट ऑफ इक्विटी कैपिटल बढ़ेगी बट द ओवरऑल कॉस्ट ऑफ कैपिटल आर ए रिमेन सेम फर्म्स मार्केट वैल्यू रिमेन सेम. आर वी क्लियर? तो इसका मतलब है कि आप डेब्ट कैपिटल यूज करो या ना करो, कम करो, ज्यादा करो, उससे ओवरऑल कॉस्ट ऑफ कैपिटल में कोई चेंज नहीं होगा और उससे फर्म की मार्केट वैल्यू में भी कोई चेंज नहीं होगा. अगेन वी हैव दिस आर द assumptions. Okay, total 6 assumptions are there you need to remember, and this is the formula. And now we are moving for the third one. Write down the third title. Approach. Approach. The approach was developed or presented by Modigliani and Miller in 1958. याद रखना, maybe in 1 mark, one question, MCQ question that will be asked, in which year approach was presented. So year is 1958, and here stand for Modigliani and Miller. Please try to remember the spelling also, because in one of previous question I have found one question, stand for ... an MCQ question. Okay, and I think so in 2018-19. So stand for Modigliani and Miller. According to this approach, the financing decision of the firm does not affect the market value of the firm. Financial decision means capital structure decisions. Change in a capital structure does not affect the value of the firm. That's why it is known as irrelevance theory. An average cost of capital does not change with the change in the debt weighted or equity mix or capital structure of the firm. What said? If the company changed the debt proportion, if the company changed the equity proportion, if the company used more debt, anything company can change in a capital structure that does not change the overall cost of capital. So overall cost of capital that remains same. Whether company use more debt, whether company use less debt, whether company use more equity, whether company use less equity. Are you clear about this condition? आप डेट यूज करो ना करो, ज्यादा करो कम करो, उससे ओवरऑल कॉस्ट ऑफ कैपिटल में कुछ भी इफेक्ट नहीं होगा. And that's why the said, this is the important light of this theory. That's why they said that there is nothing which may be called the optimum capital structure. क्या कहते हैं जी? There is nothing like optimal capital structure. Here optimum or optimal capital structure means a capital structure in which market value of the firm is very high and the cost of capital is very low. But ये क्या कह रहे हैं? Average cost of capital remains same. So according to this Modigliani and Miller, in a real business, in a real world, there is no any optimum capital structure. Let's try to understand this line with one of the example. Okay, हिंदी में कहावत है, कहते हैं कि सामने वाले की थाली में जो भी लड्डू होगा वो हमको बड़ा ही दिखेगा. ऐसा सुना है आपने? सामने वाले के पास जो भी लड्डू है, दो लड्डू है, तो सामने वालों को जो दिया है वो हमें बड़ा ही दिखेगा. क्यों? Acha, let's take your example. Suppose in financial management we have 30 marks of internal. Okay, out of 30 क्या आपका नाम है? श्रुति. आपका नाम क्या है? मीत. और इसका भी मीत है. ओके, मान लो कि मैंने मीत को 28 मार्क्स दिए. How many marks out of 30? 28. मीत, अब आप क्या सोचोगे? Are you getting my point? और मैंने श्रुति को दिए हैं 29, इसको दिया है मैंने 27. Are you getting my point, all of you? So मैंने इसको दिया तो ये क्या सोचेगा? सर एक मार्क और बढ़ा देता तो मैं मीत के बराबर हो जाता. और मीत क्या कहता कि सर अगर एक मार्क्स आपने ज्यादा दिया ना तो मैं श्रुति को कॉम्पीट कर जाता. मैं उसको बोल देता कि मैं तेरे साथ हूँ, मैं तेरे से आगे हूँ, मैं तेरे इक्वल हूँ, मैं तेरे से लो नहीं. और श्रुति क्या कहती पता है? उसके आगे तो कोई है नहीं, वो तो फर्स्ट है. फिर भी वो क्या कहती? सर अगर आपने एक मार्क दिया होता ना, एक मार्क, तो 30 out of 30 होगा. Are you getting my point? So somehow we are not satisfied what we have. Are you getting my point? The same is applicable to companies. company can't get a maximum benefit. Company can't get a maximum benefit at that particular level. That's why the MM said that there is nothing like optimum capital structure. कोई भी कंपनी अपने कैपिटल स्ट्रक्चर से 100% satisfied नहीं हो. Are we clear about this theory? Now coming to the next slide. Some assumptions are there. These assumptions are fulfilled. Okay, then and then this theory is well. Number one is there is a perfect capital market. Perfect capital market means market is perfect in terms of all the conditions. There are number of sellers, there are number of buyers, all are price takers. There is no restriction about the entry and exits. The price mechanism is work according to the demand and supplies. No one is price maker here. Okay, investors and buyers are having all the information. They are rational. They are not emotional. Are we clear? And the best example of perfect capital market is share market. Share market is perfect in terms of all the conditions. So here, MM said that there is a perfect market. क्यों बेटा इतना लेट हुआ? लेट क्यों हुआ? हाँ, उसको मैं बाद में बात करता हूँ. चलो. Assumption number 2. There is no retained earning. What do you mean by retained earning? What do you mean by retained earning? Internal? Okay. Internal source is fine. You're right. No. Here, suppose company have a profit of rupees 5 lakh. Out of that 5 lakh, company has declared a dividend of rupees 2 lakhs. So remain 3 lakhs is there with company. That 3 lakhs are considered as retained earning RE, or it is considered as reinvestment of profit in the business. Are we clear about the retained earning? Retained earning means a part of profit which is reinvested by the top management in the company for growth and expansion. Here, what is the condition? There is no retained earning. It means this option is not available with the company. Whatever the profit company will generate, this entire profit will be distributed as a dividend. There is no reinvestment of profit. Whatever the profit we will earn, that we will distribute as a dividend. ये कंडीशंस है बेटा, ये रियलिटी नहीं. अगर ऐसी ऐसी कंडीशंस होगी तभी ये थियरी वर्क करेगी. ओके, उस पर भी मैं आता हूँ. आपने जो पॉइंट किया उस पर भी मैं आता हूँ. Now the condition number 2 is clear? Yes. Okay. Now coming to the last to second condition. देखो, the dividend payout ratio is 100%. Whatever the profit we have, all the profit is declared as a dividend. Coming to the third one, no corporate tax and investors are rational. They are using their minds, they are using the technology, they are using some of skill, knowledge to take a decision. They are not emotional fools. Okay? Next one and last one. Business risk remain same. Level of business risk remain same, constant. Again, वापस से repeat करते हैं. Perfect capital market, no retained earning, no corporate tax, investors are rational, 100% dividend, and business risk remain same. Shall we go ahead? But before that, if somebody asks about the limitation of any theory, it is not talking about this MM approach or NI approach or NY approach, in any subject, in any point of view, in any theory. Okay, whenever somebody asks about the criticisms, limitations, so generally what happened, all the assumptions of the theories are the criticisms, limitations. Are you getting my point? जितनी assumptions ज़्यादा होगी उतनी उसकी limitations ज़्यादा होगी, उतनी वो theory weak होगी. Are you getting my point? Clear? तो यहाँ पे आप ऐसा बोल रहे थे कि सर अगर ऐसा होगा कि 100% डिविडेंड होगा, नो रिटेन होगा, तो this is the limitation of this theory, that in real world it is not possible to distribute the entire profit as dividend. Are we clear? Okay, coming to the next. Now the main theory that explained by the MM. This para explains the theory of Modigliani and Bloch. Now read out this one and let's try to understand this. If two firms are alike in respect except they different in respect of their financing pattern, it's not pattern, it's pattern. Okay, and the market value. Suppose two companies are there. This is explained by MM. वो दोनों क्या कह रहे हैं? There are two different companies. Suppose called ABC and XYZ. Okay, two companies are there. This both the companies are similar. Both the companies are same. ABC के जैसा XYZ है, XYZ जैसा ABC. Except the two things. Except one, that is financing pattern. Suppose in ABC company we have equity shares, preference shares, and debentures. In XYZ we have equity and we have preference. We does not have debentures. Are you getting my point? Here in ABC we have equity, preference, and debt. In XYZ we have equity and preference. We does not have debt. One difference. Second one is market value. Okay, suppose here XYZ having a market value of rupees 20, and here this ABC Limited have a market value of 40. Okay, ABC की market value है 40, XYZ की market value है 20. Now coming to the next. Now something. Then the investors will develop a tendency to sell the shares of overvalued firm. Now investors sell the shares of overvalued firm. Now see, by comparing this both the companies, which one is overvalued? ABC is overvalued. So it means these ABC shares are selling. Okay, all the investors are selling their shares of ABC. Coming to the next, and to buy the shares of undervalued firm. What will happen now? Investors what do? They purchase the shares of XYZ Limited. Are you getting my point? जो भी कंपनी का ओवर वैल्यूएशन होगा उस कंपनी के शेयर्स मार्केट में शेयर होंगे, जो भी अंडर वैल्यूड है उस कंपनी के शेयर्स परचेज होंगे. नाउ दिस प्रोसेस sell and purchase, sell and purchase, sell and purchase, sell and purchase remain continue till. Now see the last one. वो प्रोसेस चलता ही रहेगा. Sell and purchase, sell and purchase, sell and purchase. Buying and selling pressure will continue till the two firms have same market value. अब इसका market value और इसका market value, suppose here 20 plus 40, suppose इसका down होके हो जाए 30, इसका up होके हो जाए 30. जब तक ये दोनों सेम नहीं होंगे तब तक ये प्रोसेस चलता रहेगा. Investors are sell the shares of ABC up to it become 30, and investors are purchase the shares of XYZ up to the price become 22. Once this 30 comes, this pressure is now stopped. This process is now stopped. Are we clear about the theory? Everyone, are we clear about? Okay, write down the formula. V is equal to EBIT. EBIT stands for interest before interest and sorry, earning before interest and tax, or profit before interest and tax. In bracket 1 minus T, and your KO stands for cost of overall capital or overall cost of capital. Then again, we don't have any practical questions, so don't worry about the formula. Just remember that is helpful to write the content in the theoretical question. Coming to the next diagram of approach. Initially, as company use more debt capital, it's KD, it's not K. The last line is KD. Your KD means cost of debt. As a company use more debt, initially the cost of debt will decrease and overall cost of capital and cost of equity will increase up to a particular level. After that, if it continues to increase the debt capital, it will also increase the cost of debt, but it will reduce the cost of equity and cost of overall capital. This process is again remain same up to this point where the cost of equity, overall cost of capital and cost of debt become. Are you getting my point? अगर ये point यहाँ पे merge हो जाता है तो यहाँ पे बात खत्म. Are we clear about this? The diagram is clear. Initially, it will reduce the cost of debt and increase the cost of equity and overall cost of capital. But later on, the cost of average capital or cost of equity will reduce, but the cost of debt will increase. With this, our approach is done. Now moving for the next traditional approach. इसमें No, like both have a different arguments. हाँ वो दोनों में सेम ही रहेगा because both are the irrelevant theories. But see here, what is the condition? What is the theory that NY is saying? It explains that if company use more debt capital, if you see here diagram, it will help you to understand. What he say? What NY say? Net operating income. As the company use more debt capital, overall cost of capital remains same, but the cost of equity will increase because the risk perceptions of investors are higher. Okay, market value remain same, our cost of capital remains same. ये clear है? Now see this diagram. Are you getting my point? Here, cost of debt is not remain same. Initially, it will decrease. Later on, it will increase. Your cost of overall cost of capital initially increase, but at that point, it will decrease. Okay, and ये कहाँ पे खत्म होगा? जहाँ पे दोनों एक हो जाएंगे. Here by this. Now clear? Okay. Next one, traditional approach. This approach is a mix of net income approach and net operating approach. In our language, it's a cocktail of two theories, NI and NY. And this way some authors are called at intermediate approach. And according to this approach, mix of debt and equity can increase the value of the firm by reducing overall cost of capital up to certain level of debt. Okay, let me explain this entire para with one example. Are you aware about the marginal utilities? Marginal utilities.
Yes.
In economics, you have studied marginal utilities. Okay. The same is applicable here. Let's take one example. From last 7 days, from last 7 days, nobody is offering your food. You are hungry from last 7 days. 6 people are there in class. Okay, and हमने इनको एक क्लास में बंद करके रखा है. कहीं पे जाना हो तो जा सकते हैं, लेकिन ये कुछ खा पी नहीं सकते. ओके, क्लियर है? नाउ एज श्रावण मास मुझे थोड़ी दया आ गई, चलो मैं कुछ लेके जाता हूँ. सो मैं मार्केट में गया, मैंने कुछ एप्पल्स परचेज किए. ओके, और एप्पल्स का वो बॉक्स लाके यहाँ पे रख दिया. now you are free to eat the apples. Now you are free to eat the apples. What happened once you eat the first apple? आप फर्स्ट एप्पल खाओगे तो आपको कैसा लगेगा, क्या होगा? यू गेट अ मैक्सिमम सेटिस्फेक्शन. ओके, हाइस वाला सेटिस्फेक्शन, जन्नत. yes. और कुछ? ओके, now you eat a second apple, then are you sure? Are you sure? Extra satisfaction. Once it's done, if you go for the second round, okay, satisfaction is that, but that satisfaction is not up to the first round. Okay, जो first round में satisfaction मिलेगा वो second round में नहीं मिलेगा. Okay, अब मान लो कि आपने दूसरा भी खा लिया. Now you are going to eat number 3. Okay, खा लेंगे, चलो 3 तक तो हम खा सकते हैं क्योंकि लास्ट 7 days से हमने कुछ नहीं खाया. 3 हमने खा लिया. मान लो कि now I am offering one more to you. अब क्या होगा? नहीं सर, अब रहने दो, अब बहुत हो गया, ये. फिर भी मैं बहुत फोर्स करूंगा कि भाई 7 days से कुछ खा नहीं, तबीयत बिगड़ जाएगी, अच्छा है कुछ खा लो. और मैं ऐसा भी बोल दूं कि नेक्स्ट 2 दिन तक आपको मिलने वाला नहीं. ओके, तो अब क्या करोगे? कोई बात नहीं, चलो हम कहीं पर भी एडजस्ट करके 4th one खत्म कर देंगे. लेकिन उसके बाद भी अगर आप खाना चालू रखोगे तो क्या होगा? What happen if this process is continue after the 4th apple, 5th, 6th, 7th, 8th? Not a physically, but mentally you will get a dissatisfaction. Are you getting my point? So from the first apple to 4th apple, you are getting a satisfaction, and the level of satisfaction will decrease as you eat more apples. But up to that particular level, up to the 4th apple. After the 4th apple, if you will continue to eat the apples, your satisfaction converted in dissatisfaction. Same is applicable here. If company use a debt proportion, debt capital up to 1 lakh, 2 lakh, 3 lakh, 4 lakh, 5 lakhs, okay, it will reduce the cost of capital, overall cost of capital. But if company go beyond the 5 lakh, it adversely affect, it will increase the cost of capital. बात समझ में आया? अगर 5 लाख तक, सपोज मैं एग्जांपल दे रहा हूँ, 5 लाख तक कंपनी यूज करेगी तो क्या होगा? ओवरऑल कॉस्ट ऑफ कैपिटल डिक्रीज होगा, उसके बाद वो इंक्रीज होने लगेगा. So are you clear about this concept? Same is written here. I am not going to explain it. Read the assumptions. Here, firms pay 100% of its earning as dividend. It means 100% dividend, no retained earning. Whatever the profit we have, all the profit will distributed among the shareholders. Number 2, no change in total assets. Number 3, no change in the total finance, and no change in operating profit. Business risk remains same, and firm has a infinite life, unlimited life. And last one, investors are behave rational. Again repeat करता हूँ, investors are rational, life of the firm is unlimited, and business risk remains same, profit remains same, total finance remains same, total assets remain same, and 100%. Are we clear about this? That's so. Okay, with this, our theories of capital structures are over. There are four theories, again I explained: net income, net operating income, and traditional approach. Net income is relevant theory. According to this approach, there is a relation between farm value and from market value and capital structure. And NOI both are irrelevant theories. Chalo. Any doubt? Any query? No? थोड़ा सा टाइम है तो इसको हम यूटिलाइज करते हैं. Write down the next item. Because if we complete this theoretical point in this session, from the next class we are able to do the practical questions. Okay. So write down the title. Next title: leverage. Done. Title done. This is our fourth part of Unit 2. Okay. First part, sources of finance. Number 2, cost of capital. Number 3, capital structure. And fourth one is leverage. And let me share the next slide. Okay. Read the line. The term leverage refers to an increased means of applying some buffers. Now, this is not important. This is general meaning. For us, this second para is important. Try to understand it. In the financial point of view, leverage refers to furnish the ability to use fixed cost assets or fund to increase the return to its shareholders. If I say in a simple language, when company use debt to finance in capital structure, at a time we can say that company have leverage. Are you getting my point? Whenever there is a debt capital in capital structure, at that time we can say there is a leverage. So leverage means use of fixed return securities in the capital structure. डन है ये, बहुत ही सिंपल मीनिंग है. One of the definition is given by James Swan: the employment of an assets or a fund for which the firm pay a fixed cost or fixed rate. तो मैंने कहा वही वो कह रहे हैं. Employment means use of assets or funds for which the firm means company, need to pay a fixed cost or fixed return. Suppose company has taken a loan of rupees 5 lakh at a 5%. Okay, 5% loan of 5 lakh, 10% debentures, 20% bonds, 8% long-term loans, 12% secured loans. So these all are the examples in which company have leverage. Are we clear? तो जिस भी कैपिटल स्ट्रक्चर में डेट कैपिटल होगा वो कैपिटल स्ट्रक्चर में लीवरेज है. If the company using only equity shares, at that time we can't say there is a leverage. ओके, तो याद रखना एमसीक्यू क्वेश्चन 1 मार्क क्वेश्चन में when there is only equity shares, no leverage. When there is a debt proportion, debt capital in a capital structure, there is a leverage. Are we clear? Okay. Now next, the types of leverage. This is important for all of you because we have practical questions based on this. Okay. Financial leverage, operating leverage, and composite or combined leverage. Let's understand one by one. Operating leverage. Operating leverage. This leverage is associated with investment activities. It's called as operating leverage. Now, read the second pair. This is important for all of you. Operating leverage may be defined as company's ability to use fixed operating cost to magnify the effect of change in sales on its earning before interest and tax. In a simple words, we can say that operating leverage represents the relation between changes in a sales and changes in EBIT, earnings before interest and tax. ये मैंने कहीं पे लिखा नहीं है, लेकिन आप लिख लो, आपको ये हेल्प करेगा ये समझने में. Operating leverage means, or operating leverage represents a relation between change in a sales and EBIT, earning before interest and tax. It's represent the relation between change in a sales and EBIT. Operating leverage have two different important elements of cost. One is variable cost and second one is fixed cost. Here fixed cost means this cost remains same in respect of level of output. Whether you produce 1 unit, 2 unit, 5 units, it remains same. Suppose I have rented this room for my class, okay? So whether student 1 come, 10 come, 20 come, up to 60 come, 72 come, the rent remains same. मैंने ये रूम रेंट पे रखा है, मान लो 20,000 per month. So I need to pay 20,000 rupees to the owner in respect of number of students. And variable cost means it's vary with the production. If we produce 1 unit, it's different. We produce 2 units, it's different. When the company is said to have a high degree of operating leverage, if it is employ a great amount of fixed cost and smaller amount of variable cost. ये एक लाइन है जिसको आपको याद रखना है किस तरह से. If company use more fixed cost and less variable cost, the operating leverage is very high. That's why the degree of operating leverage depends upon the amount of variable cost structure. कैसा का स्ट्रक्चर है, कितना वेरिएबल कॉस्ट है, वो डिफाइन करता है, वो डिफाइन करता है कि ऑपरेटिंग लिवरेज कितना है, वो हाई है कि लो. ये ब्रेक एंड इवन एनालिसिस एंड रिमेनिंग थियरीज, remaining formulas and practical questions we will do in the next class. Okay, all those are here in online mode. Please write your enrollment numbers for attendance purpose, and those are here. Write your numbers.